my late partner Jim Sinclair used to talk about. He said uh, he could foresee the day where China would say, "Okay, gold's $50,000 an ounce. It's bid at 50,000. It's offered at 50,000. What do you want to do?" So if they peg the price or set the price at $50,000 or in yuan or whatever, but equivalent of $50,000, then what is the price worldwide? It's got to be $50,000
Hmm.
because that's the market. I mean, money is going to flow where it's treated best. And if the West is at $4,000 gold or $5,000 gold, and China's buying it and selling it in whatever quantities you want at $50,000, that then becomes the price.
In a striking scenario once discussed by Bill Holter and his late partner Jim Sinclair, the idea of China setting gold's price, say at $50,000 an ounce, could completely reshape the global financial landscape. If China pegged gold at such a level, global markets would have little choice but to follow. Money, after all, flows where it's treated best. A move like this wouldn't just challenge Western valuations, it would rewrite the rules of monetary power. The West might still cling to $4,000 or $5,000 gold, but if China trades freely at $50,000, that price becomes the real market. Like and subscribe for more insights into the evolving gold landscape.
If you're sitting on silver and markets close, I can't think of another asset that I want to have in my hands other than a loaded gun and food. I cannot think of any monetary asset that I would want in my hands other than silver if markets close. And I'm not dissing gold. Gold is for, that's your store of wealth, but you're not going to trade in gold. I mean, you're going to have a hard time with silver eagles or 1 ounce bars or 1 ounce rounds, silver rounds. You're going to have a problem getting change back. Understand that gold and silver have been suppressed. The prices have been suppressed literally for 50 years, since 1976 when they started with futures and options on metals. Understand that gold has been suppressed because it is the direct competitor to fiat currencies, whether it's the dollar, the pound, the euro, the yen, whatever fiat currency, gold is the direct competitor. Now, if let's say 10 years ago, gold didn't stop, or 15 years ago, gold didn't stop at the $1,900, $2,000 level, and it blew through, and it got to 4,000 like we are now, and then it moved to 6, 7, 8,000, and started spiking. What that tells you is it's not gold going up; it's the fiat currency that's losing value. The financial system very well could end is with silver. There's obviously huge tightness all over the world in silver. India has doubled the amount of ounces. Forget about dollars or rupees. They've doubled the amount of ounces they're importing. The bullion dealers in China have basically closed down and they're not selling silver. The one bullion dealer that is selling silver is selling it at $128 an ounce. Silver's gone into backwardation where the futures or where cash is higher than the futures. The lease rates have exploded. It's primed and set up for failure to deliver. And I can't stress enough how important it is for silver not to fail to deliver, because if it does, it'll immediately spill over to gold. And you get action in gold like we're seeing in silver, that's the end of the system. And I say the end of the system because confidence will entirely break. And the fractional reserve / fiat system runs 100% on confidence. And if you break confidence, and it goes back to what my late partner Jim Sinclair used to say: what is the value of a contract that cannot perform? And the answer is zero. And he posited that you could see gold futures at $10 offered, no bids, and $50,000 bid and no offers, meaning people will not accept contracts because they know they're not going to perform. They want the real deal in their hands. In 2011, we had the spike up. It It didn't go through 50. It fell back, and then they smashed it. And of course, they smashed it in 1988 also. This time. I know it's not good to say this time it's different, but it is different. It's already different. You can see it. We've been over $50 now for what, a week,
Mm-hmm.
maybe a week and a half. But the thing is, we've gone through 50, and the buying, if anything, has increased. And the risk here is that the chart goes parabolic, and the blood in the water that the sharks smell is that there's not enough supply, and that that they can break these markets. So when I say break the markets, you've got too many longs demanding delivery, and there's not enough supply. And we're going to find out that both gold and silver have been fractional reserve markets where they counted on only 1 or 2 or 3% of the longs standing for delivery. It's been a process. This has been taking place for 2 or 3 years now. If you look at both gold and silver on COMEX, the first notice day, and I'll just use a number of 100. Let's say there was 100 contracts standing for delivery. Prior to a couple of years ago, 3 years ago, what would happen is you have 100 contracts going into first notice day, and by the end of the month, it might be only half or 25%. In other words, the longs liquidated, took cash settlement, and walked away. But what's happening now is you get first notice day with that same 100 contracts, and by the end of the month, you might have 150, 200, 250 contracts standing for delivery. So no longer can you count on first notice day being a big number, and that's going to shrink from there. What's happening is buyers are set up, they're buying that month contract and saying, I want delivery. So they're piling up now. They're forming a line, if you will.
Wow.
It's a bank run into gold and silver, and that's what's going on with COMEX. Maybe did I make a mistake buying junk silver? No. If you wait a month, 2 months, 3 months, and this is assuming the system continues and does not collapse, in the future, in my opinion, junk silver is going to end up holding the highest premium of any form of silver in North America, because the supply is being wiped out whenever anybody sells it. It's being destroyed. It's being melted down.
In a powerful breakdown of current market realities, Bill Holter warns that silver may soon stand as one of the few assets truly worth holding if markets freeze. Unlike gold, which stores wealth long-term, silver could become the go-to medium for trade when confidence in fiat currencies collapses. With supply tightness mounting globally, from India's record imports to China's bullion shortages, silver's physical demand is surging while futures markets face strain. If deliveries begin to fail, Holter cautions, it could trigger a systemic confidence collapse across gold and silver alike. And when confidence breaks, the entire fractional reserve system follows. Let's get into the interview.
Yeah, platinum, if you go back to the early 2000s, at one point it was triple the price of gold. I don't know. I think, a big use for both platinum and palladium are the auto industry through the catalytic converter. Yeah, I mean, that's obviously a big demand. I view gold and silver as the true precious metals. If you want to talk about palladium, platinum, yeah, they're precious, but they're all, and silver's also industrial too. Don't get me wrong. But gold and silver are the true precious metals, and I view those as more speculative, more specific. If you're going to buy platinum or palladium, do your research and know why you're buying it, for what reason, and follow that reason to see whether it's unfolding or not unfolding. I've taken more sale orders in the last 12 months than I had combined in the previous 15 years. And what that tells me, and I've asked people, why are you selling? And 95 plus percent of the time, people say, I need the money. I got to pay taxes. I got to do this. I got to do that. The money is running out on the streets in the United States, the real economy. Another thing you can look at the traffic flow in Las Vegas. I mean, that's down something like 18%. What that shows you, I mean, those are real-time numbers showing you that the real economy is having a hard time. It's slowing down. You look at the official government numbers, they're all bullshit. They're telling you the economy's growing, inflation's coming down, everything's great. That's not the case. Now, in the rest of the world, yeah, you're seeing lines all over the place. I mean, how is it that other than possibly the government telling them don't sell any silver, we want to portray a shortage, but I don't think that's the case. I think there's a real shortage. Actually, I know there's a real shortage. I mean, just look at what's going on in London. They're scrambling to be able to make deliveries. And it's just so important that people understand that if silver fails to deliver within 72 hours, you're not going to see markets open. Markets across the globe will not be able to open, in my opinion, within 72 hours. If you don't have your physical stock certificates and your broker goes under, what good is that to you? Because legally, those mining stocks are not yours. They're owned by your broker for your benefit, but you're not the legal owner. Your broker is the legal owner. And if they go out of business, guess what? You had all those great gains, but now you have zero because your broker died and he took your stocks with him.
In this striking reflection, Bill Holter sheds light on a troubling reality: the visible slowdown in the real economy. From empty pockets to dwindling traffic in Las Vegas, signs of strain are everywhere. People are selling precious metals not by choice, but by necessity. Beneath the surface, a deeper threat looms: a tightening silver market that's on the edge of breaking. London's delivery scramble is a warning. If silver fails to deliver, Holter believes global markets could freeze within 72 hours. In such a moment, only what you hold in your hands will matter. Not paper, not promises. When confidence fades, real assets become the only truth. Like, share, and subscribe for more market insights.